welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand all the latest cues from the D Street, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing the most in trade. We will also focus on the companies that are set to report their earnings today and what should be investors' strategy on those and what can be the big expectations. All of that will be following up with an expert discussion. But first up, a quick check on how the markets are doing at this point in time. Well, subdued opening and therefore the markets are still trading muted. 18,333 for the Nifty, down about 15 points. Similar decline on the Sensex as well at 61,961. Absolutely flat with a negative bias. Let's look at the broader markets and see what's the action on that front. On both the mid cap and the small cap 100 indexes, both these indices are in fact trading with gains, so definitely outperforming the benchmarks today with 0.4% of an uptick for the mid cap 100 index and 1/10% higher for the small cap 100 index as well. Let's also look at the sectoral indices like the Nifty Bank, for example. That's trading with about a 0.25% fall in today's trading action. Apart from that, some gains coming in on the FMCG pack. That's the index that's gaining in strength. The IT stocks are absolutely flat at this point in time, but just with a positive bias. We are also seeing the auto stocks are slightly up in trade as well, but the banks are definitely down. Let's also look at the pharma stocks, the royalty pack. That's up by just absolutely flat, 0.01% for the Nifty Royalty. So a lackluster move is what you can really see. The Nifty Healthcare Index, however, is up by 0.9%. So that's the one that's inching towards the day's high level. Some of the gainers also include from the pharma and the healthcare pack today. Sun Pharma, Dr. Reddy's, Apollo Hospitals. These are the top Nifty 50 gainers today. So it's the pharma stocks that is gaining strength. Some of the auto majors like Maruti and Hero MotoCorp are also up in trade. SBI Life, for example, is also up by 0.8% or so. We'll also look at some of the losers at this point in time. Profit taking clearly on the Adani Enterprises stock right now. 5% down for this one. Adani Ports is down by 2%. Hindalco also seen a cut of about 1% odd in today's trading session. Tata Motors, HDFC Twins, both of them you're definitely weighing on the markets at this point in time. But time now to welcome our guest on the show. Mr. Kranti Batini joins in, Director Research at Wealth Mill Securities. Welcome, sir, and thank you so much for taking the time out for this discussion. First up, your comment on the overall markets. We're again seeing the markets move in a narrow range. There has been, the efforts from the bulls to keep the Nifty buoyant above 18,400, but definitely we see these bouts of profit booking that take place. What is your own sense of how the markets may shape up as we go forward? Because a lot of macros are going to be important for the markets to track as we speak, because the US debt ceiling is the one issue that continues to keep markets on the edge. On the domestic front, the RBI governor is clearly talking about how the war on inflation is not yet over, but on the bright side, he does believe that he wouldn't be surprised if the growth in the economy really touches even 7%. They've given a 6.5% target. So looking at these kind of macros and the earnings that are coming about, what is your own sense of the markets going forward?
Yes, actually, markets are in a complete range bound right now, and for Nifty, it's in a complete range bound. Okay, we need to watch clearly how Nifty could able to sustain above 18,500 level. This is the level one need to watch in for the upper cap. And once the market rises above this limit, this level of 18,500, we can see market moving towards the higher end of the next level of the Nifty. Till the time the action is more on the stock specific, we have the result season. One hand is going on. Last fortnight, the results given by the companies are pretty good in line with the expectation. There were no earning disappointments at this point of time. So markets are waving. One is the macro data in the domestic markets, which looks very positive, and the global concerns like the US debt ceiling. These are the triggers that are making the markets in a consolidation phase. We need to wait and watch how these events are going to evolve in next couple of weeks. So for India is concerned, we need to watch clearly 18,500 levels of the Nifty. If the market could able to sustain above this level, we can see some kind of movement in the indices. Till the time, it's going to be more about stock specific. One need to track the individual stock performance and how the earnings and the guidance of the company and how the things are panning out towards the company's expansion plans and the margin recovery of these of the individual companies in their portfolio in next at least coming 2-3 quarters.
Okay, understood that. Let's focus on some of the earnings that are likely to come today, and some of the big earnings include the earnings of LIC, the insurance behemoth. That's likely to report its earnings in the last two odd trading session. Because of the kind of bump up that we've seen in the Adani group of stocks, there's been a lift in the kind of investments that LIC has made in the group as well. In fact, the market value of LIC's investment in the Adani stocks has hit 45,000 crores in just less than a few days as well. I wanted to understand from you, LIC has definitely been a big underperformer from the time it got listed on the D Street. It's trading below 600 mark at this point in time. It's been just like a very long wait for the investors who got their allotment in the IPOs, and they have been waiting for a long time for some kind of bright spots that could be seen. Now, in the last quarter, of course, earnings wise, there were some bright spots. The company had reported positive results. The expectations this time around is also on the positive zone. But what will it really take for LIC as a stock to really perform? Will these earnings be really something that will give a lift to the momentum that we are seeing on the stock?
One thing actually investors need to keep in mind always there is a phenomena in the market. Highly popular stocks and highly discussed stocks never been the instant or immediate rewarders in the market. So LIC is one of the stock in India which was regarded and highly popular in India. So
Hmm.
this is one reason for the LIC's underperformance. But coming to the point, okay, the time the stock got listed, because of the market capitalization of LIC and the size of the stock is concerned, we have not seen significant inflows that are hitting the market from in terms of the FPIs or the DIS. Markets are in a complete range bound, and since the stock market capitalization is very high, the price is always factored into the stock price. So, and also we have not witnessed any kind of significant positive news from Life Insurance Corporation. There are no earnings upgrades with respect to their earnings are concerned. And also, as LIC is perceived as one of the proxy for India's equity market. So, as the markets are choppy, we have not witnessed any kind of up move in LIC. But one thing is, the stock price got corrected significantly from its IPO, the IPO issued price. Uh, One can consider the stock at this point of time purely for a longer term basis because of the
Okay.
size and the fundamentals of LIC is concerned. And there is no significant dividend. That is the base minimum expectation from the investors. That also LIC has disappointed in terms of the dividend declaration. Also, we need to wait and watch how the things are going to pan out. But for the investor perceived as a long term investor, they need not have to worry for the long term. What we need to wait and watch is the one of the concern for the investors in LIC is actually because since it's a public sector undertaking, government have a tendency to offload its stake as a OFS or some kind of stake offloading that happens. This is one of the overhang towards LIC. So the management has to come up with a clear plan how the earnings are going to pan out and what is the premise of government diluting their stake over a period of time. These are the basic expectations from the investors in LIC at this point of time.
Okay, understood that. And what about Nykaa now? I mean, like Nykaa again has been one stock that has disappointed, has gone through periods of volatility in the last 1.5 years from the time it got listed on the street. It gave investors a huge return in the initial phase, but then, of course, there were a lot of hurdles to follow. Of course, the company tried to regain investors' confidence with a lot of steps as well. But despite that, we've seen Nykaa really not really perform to the tune. It has continued to underperform. This time around, what are your key expectations from the earnings? Kotak Institutional Equities, for example, has estimated that the beauty and the personal care segment may continue to grow at 27% year-on-year growth. The fashion business is likely to see 35% growth on a year-on-year. So it does believe that overall on a year-on-year basis, the revenues are expected to be clocked in on a positive side of about 30 odd percent bump up at 1277 crore rupees, primarily on the kind of gains that we've seen on the festive basis. However, it's again about the profitability and how much will that continue to take shape. Your own sense, we've seen the stock really slip to 126, currently also down by about 2 odd percent ahead of earnings. How should investors be looking at the stock?
Sakshi, Nykaa again, one of the new age stock, and disappointing earnings always, and also highly priced in stock. Profitability, profitability, profitability. These are the three factors important for the investors for this company. As long as the profitability is not achieving, the stocks are going to be in a range bound in the near future. With respect to Nykaa is concerned, investors with a long-term approach need to very careful and watchful about this company at this point of time. We need to see when the company is going to be achieving its profitability. That is the core premise of any business. Till the time, I will avoid Nykaa at this point of time.
Okay, avoid Nykaa at this point in time. Apart from these key numbers, is there any particular sector or stock that you are keeping on your watch list ahead of the numbers or amid these earnings season?
Sakshi, the capital goods and engineering space, it's very exciting space, and it's a very less discussed space at this point of time. It has been. So if you see the earnings of the capital goods and engineering space, there is a phenomenal growth in terms of their margins and in terms of their order book. Investors with a long-term view, definitely they can consider capital goods space at this point of time. And the much ignored stock sector in India right now is the IT stocks. So investors with a long-term horizon, definitely they need to look for IT stocks, especially the large cap IT stocks are concerned. These are not the stocks to ignore. These are the stocks need to be on the radar, and at least investors they need to invest in a staggered manner. They can start investing because the U.S. economy is on a strong note, Sakshi. There have been recession worries, but if you see the data that's coming from U.S. is at a very strong note. Investors should not ignore these stocks. The valuations turning attractive. So one can the long-term investors definitely they can think considering IT in India.
Okay,
It's a very
okay.
completely contrarian view, but always contrarian view space in Indian markets.
Okay, one more part that I wanted to discuss with you, and that's the broader markets, especially the small caps, which recently have seen, performing better than the benchmark indices. Are you really increasingly looking at this space as a potential investment opportunity? Are you increasing your exposure here for your clients as well? And what would you tell investors?
At this point of time, actually, it's more about stock specific because by and large, the small cap stocks they need the growth capital, the working capital, and for the expansion, they need the debt. As the debt has been getting tightened in the market, and as we are in the high interest rate regime, there is a overhang on these most of these small cap stocks in terms of their expansion plans are concerned. That is one key overhang for small cap stocks. One need to be careful and watchful about these stocks because out of these small cap stocks, very few stocks could able to sustain and maintain their price margin, maintain their price levels and maintain their profitability and margins. So investors need to be very careful at this point of time. Even though the valuations looks very attractive for the investors, it's very important for the investors which stock, which sector of the pyramid the stock is operating. This is extremely important for the investors while investing in the small cap stock at this point of time.
Okay, one stock from the broader markets that's coming on my radar right now is Deepak Nitrite. This stock has shown a remarkable increase even in today's trade. It's risen about 10%, and there's reason for that. The company has actually aims to manufacture specialty chemicals, phenol, acetone at the Dahej plant in Gujarat. There's a 5,000 crore rupees investment plan that the company has shared. and therefore the stock has really showed some kind of a move on the top. Even if we look at the stock price today, right now, you will be able to see that the stock is inching towards its day high level as well. How are you looking at this stock and the news flow that has impacted this sudden jump here? Despite this move, is this an attractive space to be in?
Sakshi, with respect to specialty chemicals, there was a lot of exuberance in the specialty chemical stocks a year back. The stocks have been in a consolidation phase as a sector, and what we have witnessed is majority of these specialty chemical stocks they could be able to sustain their gains. Of course, the stocks have been risen a lot. Coming to Deepak Nitrite, it's a very well positioned company, and the stock has been it was in a completely consolidation phase at 1700 to 2000 levels. With the given the kind of momentum at this point of time, and the valuations looks little bit stretched at this point of time, above 50 PE at this point of time. Investors with a long-term horizon, probably they can buy the stock at dips. I'm not going to go and jump these stocks at this point of time. Such one phenomena, what we are witnessing in this market is whenever there is a spot in the stock price like the Deepak Nitrite at this point of time, invariably what we are witnessing is there is a profit booking is coming. So investor for a trader, it's a very good opportunity. Probably they can trade at this point of time. For a longer term investors are concerned, always the best thing they can do at this point of time in these market conditions for the time being, always better to buy on dips any stock they want to own in their portfolio.
Okay, well, thank you so much, Mr. Batini, for being with us on the show and discussing with us all these insights about several stocks that we've discussed and the opportunities that they present to the investors at large. Let's look at the markets again. They are trading still subdued, about 60 odd points of a decline on the Sensex, 61,921. The Nifty is trading with a 27-point fall at 18,321. Will the second half of trading session really bring in some kind of a momentum on the upside? Watch out for the 3 p.m. factor, because that is the exact time when we do see a reversal of sorts happen on many trading sessions as well. Will these dips be bought at? We'll continue to watch out for those signs and track every movement in the markets for you, and you can do the same by being with us on Business Today Television. You can subscribe to this platform and also continue to engage with us on our other social media platforms on Facebook, Twitter, LinkedIn and Instagram. Until then, thanks for tuning in.
My colleague and the editor of Money Today, Tina Jain Kaushal, also spoke to Mohit Kabra, CFO of Make My Trip, about the impact of the RBI move on tourists planning a holiday abroad this summer.